Dow Jones, a News Corp company. Mark Humphrey, Associated Press. The 3% expansion came on the heels of a solid 3.1% growth rate during the second quarter. The two quarters combined mark the first time the economy has expanded at a 3% rate or above since mid-2014, when the economy strung together quarters of 4.6% and 5.2% growth. If it weren't for residential investment, the biggest drag on third-quarter growth, the economy would have grown at an even faster pace. Hurricanes Harvey and Irma, which hit Texas and Florida in late August and early September, disrupted production at factories, offices and transportation centers, the Commerce Department said Friday. More specifically, the storms affected oil and gas extraction and fuel production in Texas, and agricultural production in Florida. Emergency services and rebuilding activities increased. Still, the Commerce Department said it wasn't possible to estimate the overall impact of recent storm activity on third-quarter economic growth. Household outlays advanced at a 2.4% rate in the third quarter, a deceleration from the second quarter's 3.3% growth rate for consumer spending. Spending was likely suppressed by the storms. Americans generally don't go out shopping or dining during hurricanes, which could explain why spending on non-durable goods, which includes products like clothing, grew more slowly in the third quarter than the second. Meanwhile, consumers stepped up purchases of durable goods, which include longer-lasting products like refrigerators. Consumer spending accounts for about 2/3 of U.S. economic output, typically making it the primary driver of economic output. A measure of business investment rose at a 3.9% annual rate in the third quarter, a slowdown from the second quarter's robust growth rate of 6.7%, but nothing to fret about. Business investment was dragged down by spending on structures, a category that likely was affected by the storms. Companies stepped up spending on intellectual property. The overall solid reading suggests businesses are starting to align their actions with the high confidence they have reported in surveys since the election of President Donald Trump. The price index for personal consumption expenditures, the Federal Reserve's preferred measure of inflation, rose at a 1.5% annual rate in the third quarter, up from the second quarter's 0.3% increase. Core prices, which exclude food and energy components, increased at a 1.3% rate in the third quarter after rising 0.9% in the second quarter. The latest inflation readings, though still well below the Fed's 2% target, show a pickup that the central bank has anticipated as it weighs whether to raise its benchmark interest rate again this year.